So you're going to probably see more of that. A lot of these corn farmers are going to go integrated again. I would imagine you're going to see some integration back to these small family farmers where it made no sense to grow ahead of a herd of beef when you're like, you know what, hey, I could throw 20 or 30 on my farm. I won't send the excess corn to the mill. I'll feed them myself. The dynamics are all going to change. United States, you and I talked about this before. We're not going to have food shortages, I don't think, in the United States because we're too square, rectangle. We cover too many climate zones, but I think it's going to be the politics of some of the food is going to be interesting.
And Bitcoin's price skyrocketing to $58,000 plus as Tesla invests $1 billion into the popular cryptocurrency. This reportedly netted the company $1 billion in profit. It's very likely Bitcoin is going to continue to increase in valuation. And right now, it's more vital than ever to learn how crypto works so you and your family can benefit. Trade Genius is the best platform online for those who want to learn how to make money trading the stock market or cryptocurrencies from the control of their home. I was able to profit myself because I learned to trade through Trade Genius Academy on the crypto side and took part in various courses, personal coaching, chat rooms, signals trading tool. That's where I look for price signals in cryptocurrency from Bob Kudla at TradeGeniusAcademy.com, who also offers other signature trading tools for stocks, exchange-traded funds, binary options, and commodities. All you need is an internet connection to get started. Interact with Trade Genius community, fellow traders, and certified Trade Genius trades alongside professionals who generate revenue for themselves in the stock market every single day. Live buy and sell alerts text to your phone, built for both new and experienced traders. Two of the courses Trade Genius has available. Be sure to check out their personal coaching and 24/7 chat room options. TradeGeniusAcademy.com. Click on the link below and use the promo code MARCH for 45% off non-bundled items. And now on with the video. Good afternoon, everyone. Wow, so much has happened since the last time Bob and I talked. And we had pinpointed some of these 1970s freeze events. We're going to roll back around again if it had anything to do with solar activity and anything to do if it was cyclic and not because of you and me doing what we do in our daily lives. So here we are again, another month later, and today we wanted to talk about the similarities, not only in the climate, in the freeze events, but also in the economic events that we can look a little bit into the future and see where the food price is going. And everywhere you look across, I was digging into the FAO reports yesterday and the day before, there's nowhere that food is not going up incredible amounts. The lowest amount of inflation I found on food was 6.5%. That's the lowest. So you imagine other places at 50%, 200%. So we're so lucky to be in the States only running at 6.5% food inflation. So tradelikeagenius.com. Bob Kudla, as always, like to pick your brain, and here we go. I know you're all going to get something out of this. Very valuable to set up your lives in the future. So Bob, thanks for joining me.
The margins are so thin right now for a farmer to take his beef cattle and fatten it. He's paying too much for the grain to be able to fatten the cow. And a lot of these people don't have good grazing land for grass to flip it to grass fed. They just try to get it mature, and then they just fatten it up on corn and get it into the meat packer. Well,
Bob, let me interject there just for a second. And I want to, goes right along perfectly. If any of you watch Feeder Flash, Corbett Wall from DV Auctions, they do the Midwest cattle, Central Plains cattle auctions. He was saying that the packing houses right now, there's four main buyers and they're all colluding on price. And what you're talking about, that 120, it used to be 125. Now it's 100. Now they're lowballing them where they're almost losing $50 per head, depending on which area they're going. And these guys are asking for a congressional investigation into how are four meat packers able to collude to drive the price for a slight profit, 125, 100 per head to down into a loss right now. Sickening. So they're like, this is impossible, and all the cattle ranches out there are starting to really get a little angry on that. Now it's not everywhere. It's certain regions. But again, if it starts in a certain region, maybe they're putting the toe in the water to see if it'll actually work, if these meat packers can collude. But how is that they can collude on price? That should be illegal for them to do such a thing. So what they were calling for was, anonymity in the pricing, because these apparently the slaughterhouses could go out there and take a look at the public pricing. So what they're saying is, hey, we need to bring that into a non-visible pricing structure for the cattle ranchers to be able to sell. So then they can't cut the market because they won't know what the price is on a daily out in the public arena. So they're asking for a lot of, institutional changes in the way that the beef cattle and whatnot are bought and sold in the pricing structure, visibly in or not. And they want to pull it back so the meat packers can't see what the pricing is. So Corbett Wall is a really good one to watch on that. It took me a fair few, weeks and to try to wrap my head around what was happening there.
Well, but they're also Brazilian meat packers, so they can sit down in Sao Paulo and collude all day long, and they're outside of the purview of like they all get together for dinner down there. Who's watching them, and they can set the price. And I think. And then pork, the Chinese have a foothold in the pork. I think a lot of foreign ownership of the chickens production. So, we basically outsourced our ability to feed. I think the good news from that, though, is we're going to see a massive decentralization of slaughterhouses, too. I think what happened with COVID and what's happening now with this collusion, and I think the peak centralization is, some of this stuff is going to be good news, is that people want to be closer to where their food is made, and also to get eyeball the companies a little bit closer. And so, with technology now, I mean, look, you could dress a cow and dress a pig. Anybody of any size can buy that technology now. You can buy one of those assembly lines and you can be in business pretty fast. And you're talking about 1/10 the labor of what it used to be in terms of doing it. So it's I think there's going to be some changes happening there. And, one thing about the Biden administration, but they definitely have their eye on these monopolies, though. Okay, they're not pro-China monopoly. They're not pro-tech monopoly. They're not pro-big business monopoly. So we may see a good guy in out of this. I think the regulators are going to be a lot more active. And especially if food prices really start to go up, these guys are going to they're going to have proctology exams on them, because people are going to be watching very, very closely. So that's it's really fascinating. People don't realize the mechanics of what's going on. People just assume, hey, the farmer makes it, he raises the cost to cover his cost, goes to the middleman, they raise their cost, and it goes out to the grocery store, they raise their cost. So a lot of places, the middleman has a lot of power. You're talking about ADM, you're talking about Cargill, you're talking about Hormel, you're talking about Smithfield, you're talking about, the big Brazilian meat packers for beef. All those guys, they set the price because they have the deepest pockets. They can wait out a farmer. Hey, we don't want your beef this week. And what are you going to do? You can't afford to feed it, right? So, you're going to take the lower price. And so that's always been the way. It's going to be interesting when prices start to really go. I feel the grain farmers probably are in the best situation, which is ironic, because 3 years ago, that stuff, they were just pouring it on the street because they had so much extra supply. And now I think all that supply is eaten up. You know that better than I do. All I know is corn and wheat prices are through the roof. And I know the farmers that I know that were holding their corn off market are saying, hey, this is really good prices for my corn. I'm going to send it into the mills now, because when I was selling it in the fall, it was $3.95. Now it's over $5, and I'll take it. And some of the farmers I know are actually expanding their beef herds and said, screw that, we'll feed it, dress it, get it to the slaughterhouses ourselves. So you're going to probably see more of that. A lot of these corn farmers are going to go integrated again. I would imagine you're going to see some integration back to these small family farmers, where it made no sense to grow ahead of a herd of beef when you're like, you know what, hey, I could throw 20 or 30 on my farm. I won't send the excess corn to the mill. I'll feed them myself. The dynamics are all going to change. In the United States, you and I talked about this before. We're not going to have food shortages, I don't think, in the United States, because we're too square, rectangle. We cover too many climate zones. But I think it's going to be the politics of some of the food is going to be interesting.
Yeah, and I want to talk, I did an entire study and like a 15-minute video on that USDA report, where They counted all that dumped production, all that dumped milk that never made it to market because the convention centers stopped buying, the schools stopped buying, the universities stopped buying, and all the government contracts that were out for, supplying those wholesalers that then went on to those larger venues for consumption daily. They still counted that on the books as production. It's a little gray area in there that how can the USDA get away with counting that as production? Because when you look at the levels, they showed that last year during COVID, all of 2020's milk production was equivalent or higher than 2019. And I was like, you got to be kidding me. Like there has to be some culpability here of real world events happening. When they're dumping half the milk out, they're still counting that as quote unquote production. Sickening. But as I will say one thing here around in East Tennessee, the model that some of the farmers are moving to this year right now is, they are raising 20, 25 head out there. And this is for Angus. And what they're doing is then selling it in the local market. And you can either buy half of a cow, you'll need to dress it yourself, or you can take it to the local butcher, but they're all backed up as well. Or you can learn a new skill on bringing your family by or bringing a bunch of people and then butchering that thing up through the day and everybody taking 150 pounds of meat home with them. That's the new model they're working to here. Sheep, goat, and cattle themselves sold right to the market, and you buy half a cow or you buy a full cow, and you're going to have to dress it yourself. Again, you hit it on the head. I think we're going to go back more regional for a lot of these things. But, what kind of companies are you thinking about if we're going to go back to this sort of model of, regional sales, regional production to the end consumer right within 10, 20, 50 miles of where that's being raised? Could be hogs, could be cattle, whatever. But what kind of companies are you looking at that could plug right in the middle of that and still, for you get the best of both worlds? You get the local production, but then you'll also get the gains in the market on it.
Those companies don't exist in the public markets yet. So right now, what I'm seeing is that, and and if people want to trade with me, they can. So you can join our service. You can get access to those algorithms that you see on the screen, and we have a chat room going, and I throw trades out every day, so you can take advantage of what we do, and we'll teach you how to trade at the same time. You got to stay ahead of the food inflation. So for a quick plug, tradelikeagenius.com, I put together specials for Saturday, 65% off. If you want to just pick and choose what you want to look at with us, you can use promo code March, and as in March Madness, and get 45% off what's in the store. So tradelikeagenius.com. I think you'll like what we do. Definitely cost effective, very affordable, and will definitely help you make money in the markets. But for me, the way I'm looking at it now, I'm on the front end. So I like the fertilizer companies. I'm very interested in Anderson. I'm waiting for a bit of a pullback. There's another company out there called Bunge out of South America. I'm taking a look at that. But as the inflation starts snaking its way through the system, the grocery stores actually will do quite well, because when they're buying their inventory at a price and they're selling it at a price X plus inflation rate. So they're getting a natural good guy, in their pricing. So if they go ahead and they buy, 100,000 pounds of beef, at an average of, $3.99 a pound, and by the time they butcher it down and get it out on the street, it might have gone up 3% or 2%. Well, that's pure profit for them because they've already outlaid for the meat, and that goes the same with all the hard goods. So they're just gonna wind their way through it, and then so you'll see companies like Kroger and Safeway do well. Hormel all morality aside, Hormel is a stock that I have a friend who's been trading it for 20 years, and all they do is sell calls against it, and then add that back into the pool, and goes up. He goes, look, inflation, I do well. Deflation, I do well. Hormel is one of those companies that do well. And then, the beverage stock will do well in a recession. So those are the areas in which we're watching. I have them all on my watch list. So as they pop, we're knee deep in Mosaic right now. It's been a great trade for us. We've already had a double. I fully expect it to go to $50. There's nothing telling me it's going to change. We're knee deep in, uranium. It's definitely in short supply. And then we're knee deep in crypto. So the things that I like are things in short supply, right? Food's going to be stressed, fertilizer stressed, uranium stressed, cryptocurrencies are stressed, meaning that they have pricing power. And then goes along with that is companies like Mara and Riot. They already had big push-ups higher, but if you believe in the Bitcoin story, you're going to want to own the miners that are mining it. It's kind of a way of playing an option on Bitcoin without having to outlay. I can control a whole Bitcoin value of Bitcoin without spending that kind of money, because I could just buy a contract on Mara and Riot at a fraction. And if Bitcoin doubles, I get all that good guy. So there's a lot of ways to skin the cat. And if Bitcoin goes down, which it does, right? You can buy puts on it and you're hedging your Bitcoin without ever touching it. So it's a beautiful thing for me. All I do is buy crypto. I don't sell it. With these stocks like Mara and Riot, you just go ahead and just buy and sell. If I could, I'll throw a screen up real quick and show those to you.
Yeah, and while you're doing that, I was curious about how close do you think we are to the market top before we're going to get a correction down? Because it bounced down into the mid fours, right around 46, 47, but then it seems like it's on a tear again. I think at this time it might clear 60, above 60, but it's got to pull back at some point. Don't know what you think about how close we might be to that top before we get the real first correction, because it looks like we're on the third bump heading up right now. And then,
we're going to go, we're going higher.
Going higher. Yeah. But I'm just curious on your timing, what you think after it corrects out. Well, after that third bump, where we might be on a timeline heading down after that to correct.
I think we're going to I think we'll hit 67,000 before.
Yeah.
Pull back. Like here's the line in the sand right here for a bull bear line. Okay. It could pull all the way back to 32,000 and still be considered on a bull run.
If you're tracing that line up, it goes up to 70. If you're looking at those two wave tops, if you're looking at a third wave top, then it should be pushing around 65 or 70 there. Huh?
Right here, this is my target, 66,000.
Yeah, right there you go. Yeah, you're using the fibs.
Yeah, I can do this in my head now, but that's where I'm at. But if these hit here, companies like Mara and Riot are going to be over $100. So here's Mara. So this is the big push higher on Mara right here. Okay, now it's pulling back, staying above this trend line here, staying above its bull bear line here. What you're looking for, if you're just going to be if you're an aggressive trader on it, you can buy anything down in here, or what's most likely to happen is going to turn back up. If it gets over the $39 area, then you have Mara going up to 62, up to $83, and then you have Riot. And so these are some of the moves I had with Riot of late. And I bought puts on this one. So see, I'm not dogmatic. I'll go long when I should go long, and I'll short it when I think I should short it. And now Riot is positioning itself for another move higher. It's hitting this trend line support area. I'm just waiting for my little cheat sheet algorithm to say, hey, Bob, I'm flipping up, get aggressive on Riot again. As long as it doesn't break this line right here, then when this thing changes, I'm going along Riot again. And I'm talking this $40 stock. You could spend $40,000 buying 1,000 shares, or you could spend $4,000 and you can control a $40,000 worth of Riot. And look what it did last time here. This move here took us from 17 all the way up to 62.97. So if this ABC is what I'm thinking it's going to do, you're looking at a potential move over $100 for Riot. So anyway, these are the kind of things that we show you. I'm an expert on crypto. I'm not even the crypto expert. My partner trades these. He's a miner. So he's been trading since 2011. He has this thing down cold. And if we think it's going to pull back, we tell people. So we're not, like I said, we're not dogmatic about this. We're traders. We want to make money. We'll always hold. I just hedge a different way. So when you have these tools now with these miners, it's a beautiful thing. You don't even have to get aggressive. You don't even get in the futures market and hedge. You can just hedge them with these publicly traded miners, which is a lot more convenient.
Yeah, and one last thing here. I saw Michael Saylor, I watched a couple of his talks, and he was saying, in the future, hold everything, don't sell it. Because it's a non-taxable event if you're borrowing against it. But he feels that because the story is there's so much institutional money running into it, that the laws and the ecosystem within that to allow you to borrow against your crypto holdings, whatever it is, ETH or BTC, So you won't have that taxable event, but it'll give you that equity that then you can continue to operate with as a borrow against mechanism versus a sell to take capital. And then that alleviates two things. A, you can continue to accrue, and then B, you never hit a taxable event. So that was the whole talk. And I thought that was spectacular. It's like, it's in its infancy right now. But he's like, I assure you, hold on, when there's more billions coming in, we're going to start to get to this. You'll never have to sell it. You'll continue to be able to borrow against it at a certain rate. And if it's continuing higher yearly than it is the rate you're borrowing it, and that he's like, we're off to infinity, at least the next 10 years. And I was like, all right, that sounds good. Let's, keep the updates moving on that and where the development is on how you could borrow against it. It's not like make or die where you're coming in. It's similar to that of like make or die when you come in, you can borrow a percentage against and then pay back, but it'll be a different mechanism than something like make or die.
Yeah, let me explain to people how the accounting works for cryptocurrencies on the book of a private corporation. It goes on their books. It's not treated as cash, and it's not treated as currency, and it's not treated as security. So it's treated similar to like real estate. What happens is if the price of Bitcoin goes up, they don't raise the value on their balance sheet of Bitcoin, because a lot of people said, oh, they're going to go ahead and use the price of Bitcoin to manipulate their stock price. It doesn't work that way. So once you buy Bitcoin, let's say you bought it at 50,000, you bought one coin, it's on your balance sheet for $50,000. Now, if Bitcoin goes to 25,000, you're allowed to take a $25,000 impairment charge against your Bitcoin. So the very attractive for institutions is because they can lower their taxable income as it's falling, but at the same time is then they get to store the value of the Bitcoin when it goes up. So it gives them, it's not that swinging that people are saying, oh, it's just their stock prices are going to swing uncontrollably. It doesn't work that way. It's just like buying real estate. And this happened in the 80s when a lot of these corporations had real estate on their books, and real estate basically doubled and tripled during the 80s when interest rates started to fall. And all these green mailers came in and started jacking the value of these companies up so they can break the real estate groups off of their assets off their books, because the stock price wasn't reflecting it because they couldn't record it at current prices. And that's the same thing's going to happen here. If MicroStrategies has all this Bitcoin that goes to $1 million, he can't claim that difference between what he bought it for and what it's worth today. Not going to be reflected in the stock price. It's going to have to be somebody's guess. And if somebody's going to come in and say there's an undervalued asset here, we can separate this company from its Bitcoin, and the company's worth a lot more. So that's one of the things that people are doing with it, and pretty fascinating. And also today, AXA, the Norwegian oil company, has bought $53 million worth of Bitcoin. So we're going to see all these here and there starting to pop up. There's a company out of, I think it was Singapore that bought Ethereum on their books. And so you're starting to see that. The big five are going to, do well. You got Litecoin, you got Chainlink, you got Ethereum, you got Bitcoin, obviously, and then there's a debate on what the fifth coin could be. But if you own any or a combination of all those, you're going to be doing fine over time.
And that is the future. Yeah, it's evolving as we speak. And, there are ways to protect yourself. Every stock market crash through history, every market correction through history, every reset through history, there's been millionaires made. And, there's always an opportunity for people, even in the most dire times economically. If you can see through the veil a little bit and just bend around the corner, even a small amount of protection and hedging on your side is going to, take you greatly through all these changes.
Humility aside, I think we've been calling this right now for almost 7 years. So, we have math and we have science on our side. So we're not dissuaded by the narrative. So if you want to stay ahead of the game and survive and thrive, then it pays to really understand what's going on here a little bit better. We literally are. The change is massive going on right now. We're not going to recognize the world in 5 years, and that's not necessarily a bad thing.
And if you want some more information, tradelikeagenius.com. And thanks for listening to what we had to say. Hope it guides you through the next month of changes. Until we speak again about a month from now, Bob, I do thank you for your time. And I'll leave all the links in the description box below for how you can get right over onto the service there and take a look what's on offer. And you can go from there, make your own choice, what's right for you.